Well, Balrampur Chini posted a good performance in Q3. Their volume surged, their realizations improved, while margins also surged over 100 basis points. Pramod Patwari, the Chief Financial Officer at Balrampur Chini, joins us now to talk about that. Mr. Patwari, good morning and thanks for joining in. Good numbers this time around. So can you tell us, it was a revenue growth of 25% that you clocked in, but it's also a seasonal business. So what can we expect in Q4 and, for the full year FY24, what's your guidance on the top line?
Good morning, Sonia. As you are aware of the fact that last 2 years were bad for the Balrampur with respect to cane availability, that got improved in the sugar season 22-23. So on the back of that, we registered a volume growth, and the ethanol expansion which took off in December 22. There also our distilleries ran with full capacity in the quarter gone by. So that is the result of this higher revenue growth. As far as FY24 is concerned, I think recently there was some rationalization by the government of India with respect to ethanol production. So maybe ethanol production will be lower in the quarter coming by, but sugar volumes, as far as sugar volumes are concerned, these are guided by the monthly release quota. So January and February release are already in the public domain. So we are expecting a better revenue. We are expecting a revenue growth of maybe around 10 to 11% in comparison to FY23 for the full year FY23.
Okay, so 10 to 11% top line growth is what you're looking at. You spoke about ethanol briefly. I just wanted to understand a little more about that. What is the margins that you're looking at in the distillery business? And also, what is your target for the next cycle?
For the distillery business, we would always recommend that it is a function of transfer pricing of molasses as well as the juice syrup cost. Recently, the UP government has increased the SAP by 20 rupees. So that will also result in higher transfer price of juice from sugar to distillery. We always recommend that profitability should always be evaluated at the company level and on an annual basis. So we are expecting a better profitability this year in comparison to last year on account of higher feedstock available to us.
Mr. Patwari, hi, morning, Prashant here. Good to have you with us on CNBC-TV18 as always. Just a quick point on that Sap increase. I think we've spoken earlier as well with Mr. Sarauge as well. So I think it's slightly more than what what analysts, etc., were expecting. What will this do on the profitability side, if you can quantify that for us?
Good morning, Prashant. Yes, you are right. We all were expecting this to be in the region of around 15 rupees per quintal only. And against that, it has come at 20 rupees per quintal. So this 20 rupees will again add to the cost. But as far as financial year 24 is concerned, we sell around 30 to 35% of current year's production only, and the rest gets carried away in the form of inventory. So the full impact of this will be maybe 1/3 in the current year and 2/3 will be absorbed through inventory valuation.
And what will that impact be, if you can tell us?
So 2 rupees, 20 rupees a kg means if you are assuming a average recovery of say around 11.5%, maybe 1 rupee 80 paisa per kg increase in the cost of production.
All right, and the current price of sugars. The cost of production, sir, will be compensated because the sugar price itself will be relatively higher as well. So is the sugar price higher than the cost of production that's gone up? It'll offset each other, right?
Yeah, correct, Nigel. This will offset. And in addition to that, for Balrampur, we are expecting a cane increase of around 10% further. So even if you leave aside the increase in the realization, the volume will take care of this increase in the 20 rupees cost.
Are you able
and we are also expecting a better recovery in comparison to last year. So volume growth, better recovery will take care of this 20 rupees increase in SAP.
Okay, you're emphasizing more on volumes taking care of this rather than, but at the margin price also compensates for this. But where are prices at now, sir? And because this is also, we'll get into the general election season, and sugar is a very politically sensitive commodity. So just wanted to get your thoughts.
Currently, the prices in East UP is around 38 rupees per kg. And for the price trajectory, I think we need to consider the expected production. The consensus as of now looks like India is going to have a minimum of 31.5 million ton as a net production after taking into consideration 1.7 million ton of diversion towards ethanol. against this, the domestic annual consumption is around 28.5 to 28.7 million ton. We began the year with 5.55 million ton of inventory. So if this number comes to true, then we would be adding around another 3 million ton to the inventory. So inventory of 5.5 million ton will go to around 8.5 million ton. In our view, 5 to 5.1 is the ideal level of inventory. So maybe at some point in time, government might take into consideration whether they can give additional diversion towards ethanol in the ongoing sugar season itself.
All right. We'll leave it at that. Thank you so much for joining us and giving us a quick take. That's Balrampur Chini. But